So that would be collateral of $700 because 350 times 100 and then 2 contracts. So that would be $700 collateral. And I think I feel comfortable doing that. So, I mean, if it stays below 350, then we will get assigned and buy it. But we're already 24 cents into it. So the break even is actually what, 326? Yeah, it'd be 326 a share. So I mean, it could drop all the way down to 326, and we'd still break even technically if we were just to turn around and sell the stock again, which we won't do because we're cash flow investors, or I am rather. So, yeah, let's go ahead and do that. So what I'm going to do is I'm going to prep an order by clicking again this bid because we want to sell a cash secured put. And something else to look at before I do that. Notice how the same strike price, but 2 Fridays out instead of 1 Friday out. Notice how the extrinsic value only jumped up, what, 7 cents? This one's 22 cents and this one's 29. So it only jumped up, I mean, 6.5 if you want to be very technical, but basically it only jumped up 7 cents for an additional week. So that's why I like focusing again also on weekly options. So I'm getting 22 cents, which is the lion's share of that time value that's there. The funny thing about it is if it stayed around the same price, it may or may not. I mean, that's theoretically saying that this 29-cent extrinsic may only drop 7 cents before it gets to a week, only it still went through 5 full days. So that's why I like focusing on the weeklies, because you get the biggest bang for your buck and the maximum cash flow you can. And again, so you see 22, 29, and then only 34. So it's getting lower and lower. So this jumped up 7 cents, but this only jumped up 5 cents. So it's getting lower each time you go a week out. So the majority of it is reserved for near expiration, which is why I like focusing on weeklies. All right. And it's this level of detail that you just don't get in Robinhood. This level of detail you can really expand on and analyze and theorize using this tool instead. All right, so let's get back to what we're meaning to do. And I think we're close to the end. I think this is the last thing I'm going to do. So we got 24 cents, and the spread is what, 24.25. So that's only a penny spread, so we're not going to get more than that for sure. So 24, and I do want to do 2 contracts. And the funny thing about TOS is or Thinkorswim, also referred to as TOS, TOS, plus will negate that, so you want to do minus to get 2 contracts because we're shorting it. We're selling 2 contracts. We're not buying 2 contracts. That's why it's negative. Selling is negative. All right. So we want to right click, do confirm and send, and this will give us our confirmation screen. So we would be receiving $48 in credit. It does charge 65 cents per contract, so that is taken out. The buying power is 650. Okay. the collateral is actually 700, but it goes ahead and factors in the fact that we're getting paid premium. So it's so basically it makes sense if you think about it. It's $700 collateral, which is true, but you're getting to $48. Well, you're getting to $46.68. So $46.68 is immediately, when this transaction executes, is immediately added to your buying power. Because so basically, if you take it to $46.68 plus this $653.30, it will be at or really close to the $700 collateral that we're in on this trade. So in any case, that's what it's doing. It's still $700 collateral in actuality, but it's only decreasing the buying power effect by 653 because it's adding the 46.68 in the same transaction. All right, so we're going to go ahead and send that, and then that one's placed, and as you can see, the position was added over here. Again, it's 0 because it hasn't executed yet for the quantity. And yeah,